From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hello, and welcome to the COB. I'm Nadine Blaney. It is the start of a fresh trading week. It is the 25th of November. Pleasure to be here with you on what was a pretty positive session. Overall, we did see the S&P ASX 200 hit a fresh intraday record high. Couldn't quite close at those levels, but still, last I checked at least, every single sector was positive. We had a bit of M&A news to start this Monday. In fact, that's where our three themes start. All-time highs for the S&P ASX 200. Looks as if it will be closing up by about 0.4%. Really broad-based gains, as I mentioned, with the A-REITs and consumer discretionary names looking particularly good. M&A Monday sure was. SG Fleet getting an offer from Pacific Equity Partners, so private equity, came as a bit of a surprise to the market, I'd say, with the near 20% jump in the share price at the open. It was the stock of the day. We'll get there in just a moment. Now, we also heard of an improved offer coming through for Self Wealth. Always a tough one to say, that one. I spoke with Dean Fergie from Cyan Investment Management. The interview is up online, really solid. So not only does he talk about the raft of takeovers in small cap land as of late, the reasons why, he names three companies who he reckons would make good targets. As he said, you don't want to know what's already happened. You want a heads up as to what might happen. So you can find that online at ausbiz.com.au. And Trump trade question mark. So Donald Trump continues to name his cabinet. And we had a pretty markets-friendly appointment being made today to the Treasury. And that is Bessent is his name, I should say. Scott Bessent as the new U.S. Treasury Secretary. Again, market-friendly, crypto-friendly. And also potentially put a little bit more of a floor under the Australian dollar today. We did see a bit of pressure coming through on the US dollar after weeks and weeks of the US dollar being in the ascendancy. So some interesting dynamics happening out there today. And as I mentioned, really positive across the sectors. If you take a look here, Wesfarmers up by 2.3%. Lovisa, even though there was some consternation around its update that came through last week, putting on 2% today. The brokers continue to weigh in on Lovisa. There we go. The A-REITs, I think, were the best performing sector. I'm just checking. Yep, up by pretty close to 2%. So you can see across the board there some good gains being made. From there, let's just check in on the miners. So this is where I suppose things weren't looking so crash hot by the end of the session. And in fact, the materials did slip into negative territory overall. Let's check out the gold miners though, because even the gold miners couldn't really keep pace. We did see gold rising in the US session once again on Friday. But look, nothing goes up in a straight line, does it? And when we look at gold and what the price is doing, it eased from that 3-week peak. Bit of profit taking perhaps in the gold sector. Quite a few corporate stories out there today. As I mentioned, SG Fleet climbed after it said it was discussing a 1.19, so pretty close to $1.2 billion non-binding and indicative takeover offer with private equity firm PEP. LiveHire, this is another M&A, is recommending an all-cash takeover offer from Human Force. LiveHire shares up by 55%. Now, the banking regulator says that it will retain a 3% serviceability buffer for home loan lending because of high household debt, persistent cost of living pressures, a pickup in credit growth, and a weakening job market, putting pressure on most of the big banks. IPD Group says that revenue for the first half of FY25 is forecast to exceed the previous corresponding period, talking about the manner in which its contracts are changing. So they're becoming more complex. Longer term, which IPD says, means that they've still got some work on back order. So they haven't booked the revenue from some of those longer time frame contracts. And I guess that's sort of what has pulled the share price down. It's off by close to 13%. We had a company debuting on the ASX today. Few and far between these days, but Coscal didn't have a great day. It's a payment services provider, raised at $337 million, around about there in the IPO, about a $479 million market value, but today shares shed 7%. Not so for Novonix, shares jumping close to 30% on a graphite supply deal with a Volkswagen subsidiary. And Integral Diagnostics says that it's engaging with the ACCC on the potential divestment of Capital's health clinics in Victoria. And nurses at Ramsay Healthcare hospitals in New South Wales are going on strike 24 hours, demanding a pay hike and better staffing. And just in the medtech space, 4D Medical wins a commercial contract with IPOC, and the shares are up by about 11%. So we will get some analysis on the stock of the day in just a moment. I'd like to talk big picture, what happened out there right across the region. And for that, Josh Gilbert from eToro is joining me now on Monday. Hey, Josh, good to see you as always. So we couldn't maintain the momentum, did not close at the highs of the day, but did print a fresh intraday record high. What do you make of it?
Yeah, great to be here, Nadine. Obviously you finished the week pretty strongly last week, and then to sort of carry that into this week is always a good start. I think you sort of alluded to it there. I think a lot of maybe some of that positivity we're getting today coming from sort of that sort of new Trump sort of nomination for Besen. I think that has sort of really given the market a bit of a boost. We look at US futures up by about 0.5% earlier as well, so pretty positive, given that I think he's going to sort of prioritize probably economic and market stability, probably not going to be going after sort of scoring political points, and as sort of you said as well, pretty crypto friendly too, so that's pretty positive there. And every sector pretty much in the green today, only financials sort of giving us a bit of a drag. We had CBA rally to a record high last week, so also maybe a little bit of profit taking in there. But following on from what was a strong week last week. Yeah,
okay. And what did happen with Bitcoin? I mean, I know that it failed to hit that 100,000 level just trying to get the price up here. And it was coming under a little bit of pressure in Asian trade today. As I was discussing with a guest earlier, it's a psychological level, that $100,000 mark, but still, what will it take for it to get there?
Yeah, it really is going to be a massive psychological level. I mean, to sort of get to that sort of six-figure mark is something that I think a lot of crypto investors have sort of looked to for a long time. It's the number that a lot of people have always sort of really put as the milestone number. But again, I think there's a lot of powerful momentum driving Bitcoin and crypto assets at the moment. Obviously, a lot of positivity. It's that sort of this almost perfect storm, if you like, sort of coming together. Easing monetary policy. We've got a far more crypto-friendly president, Gary Gensler, obviously set to leave the SEC. So all of that is sort of really making for a great mix at the moment. To obviously push past that $100,000 is, I think it is going to take, this big drive of retail to sort of come in. They are starting to see that pick up a little bit, without a doubt. Again, we can see it in, our platform being a retail platform. We can see that we are starting to see that pick up. And I think we are starting to see those numbers come back, but we've not still seen that at the level that we have done in previous bull markets, such as sort of 2021. Don't think we've maybe reached that sort of euphoric level, which kind of tells us that we still think there's a bit of legs in this bull market for now, at the very least. I think, to be honest, I think if we're going to get that 100K, I think we need to sort of probably get there within the next week or two. Obviously, as we get closer to sort of that December mark, we might see things sort of winding down a little bit, get to that sort of time of year. So we might, I think, need to see that within the next couple of weeks if we're going to get it. But yeah, there's going to be a very psychological level. We're going to need quite a bit of buying. I think there will be some selling resistance at that level. But I do think if we break through it, then I think we really will break through it, and we'll continue to move higher past that point, because I think that's sort of the number I think that will hold us back for the time being, given that, as you say, it is that psychological number.
Yeah, it's so interesting. I did have a chat with my guests on the call today, Jonathan Takadina from MPC Markets, David Lane from Ord Minnett. Like, they're both pretty positive heading toward the end of the year with the momentum. So do you reckon we're in for a Santa Claus rally? All the signs seem to be pointing that way.
Yeah, look, I think there's lots of positive fundamentals at the moment. We get GDP obviously out of the US this week. I think that'll be pretty important. But so far, everything is sort of pointed in the right direction. We also get Fed minutes as well. That might be quite interesting to sort of see what we hear from how the sort of the Fed have sort of tossed up their last sort of rate decision. Jerome Powell, and he said a few days ago that they're not going to be in a hurry to lower rates. They've not sort of seen any signals in sort of the latest data. So if we do start to maybe see those sort of rate cut expectations push back even further, obviously that December rate cut being questioned a little bit now as well. So if we see that push back, I think that's a bit of a risk to that sort of rally there. But for the time being, earnings season was good again. Nvidia delivered. Yes, the guidance wasn't, an outstanding number, but again, they had a lot of the weight of the market on it, and ultimately, I think that the market shrugged off that weaker than expected guidance, even though it was still a bit of a beat. And I think, those sort of fundamentals that we talk to, earnings growth, GDP, jobs market holding up in the US, I think it gives us a clear sort of move higher, for the end of the year. But as I say, maybe those, Fed minutes and if that GDP number comes in a little bit weaker than expected, that's where I think some of the risks lie. And of course, anything we see maybe from the geopolitical side as well. We saw that bubble up a little bit last week. Oil had its sort of best, gain for the week within a couple of months. We saw gold rally by about 6% as well. So I think there's a risk to that element as well.
Yeah. Okay. And we've got the PCE. We have monthly inflation here locally as well. And AGMs. We're getting quite a lot of information coming from companies at AGMs. Everything's pretty much done for the US quarterlies, isn't it?
Yeah, pretty much. We got a few names to stick through this week. CrowdStrike will probably be the name that stands out for me. Probably going to be that sort of first earnings that we get pre that sort of outage that they had back in July, to sort of really see where if it has affected their earnings, if it has affected those numbers. We didn't expect to see a huge drop in sort of retention, but maybe in new sales. We sort of felt that probably a lot of the team were obviously going to be focusing on retention and maybe not driving new sales. And unfortunately, it was going to be one of those things where if you're going to be close to signing a contract, you might have looked elsewhere. But in terms of switching networks, when it comes to cybersecurity, CrowdStrike are the best in the business for what they do. And also sort of switching up your cybersecurity is not going to be the easiest task. It's going to be costly as well. So I think we've seen that reflected in shares. Back in July, shares fell by about 40%. And then since that time, shares have sort of rallied by about sort of 45, 50% as well, basically sort of making back all of those losses we've seen since that time. So that'll be a pretty interesting earnings report to keep an eye on. And then, as you said as well, we've got that monthly CPI, which I think will probably take investors' focus locally here this week. Looking at obviously that trim number is going to be sort of the key one, expected to sort of come in at about sort of 3.4%, which would be actually a tick up from last month. Headline looking at about 2.3%. So those are going to be the sort of the key focuses, I think, for this week.
Josh, it's always good to catch up on a Monday. Thank you.
It is indeed. Thanks, Nadine. Have a great week.
Take care. And let's get to the stock of the day. SG Fleet, SGF is the ticker code. David Lane, Ords, and Jonathan Takadina, MPC. Stay with us.
That sector in general, the novated leasing sector, has been a bit of a sweet spot. The government has put in a lot of incentives for people to do novated leases for either electric vehicles or for hybrids, and hybrids in particular have been going very strongly. So it is a golden sector at the moment. If you're looking for alternatives, we've actually got a few others that we like, the likes of Fleet Partners, Scentre Group, and even COB Financial that are involved in that space as well.
They had that nice tailwind with the EVs, but since then the share price has been trending lower. Obviously, this bid is nice, so I'm actually just a little bit more cautious. If you had it previously and it's back up, I think it's at 324, which is only about a 7% discount to the actual bid. I would actually be trimming some here and taking some off, because it was actually at this price maybe 3 months ago, and then it dropped back down about 20%. So I would take that nice win, take some off the table.
So there you go. Listen, if you'd like to catch up with that episode of The Call, Jonathan was in a buying mood. That's all I've got to say there. You can find it online at ausbiz.com.au, or you can listen to it as a podcast. Perhaps if you're listening to this as a podcast, that's your jam. All right, Cyber Monday is fast approaching. You just can't get away from all the Black Friday ads right now, but we're going to save our event for December the 2nd, ausbiz.co/cyber. Stocks over socks. If you'd like to buy yourself an early Christmas present, we have lined up a great group of expert guests who will tell us what stock they believe is undervalued, has plenty of upside, basically a stock on sale. So you just have to go to ausbiz.co/cyber and you can watch it live or on demand free. Market leaders, market laggards, as we have the final figures in for this Monday session, the 25th of November. Zipco went from strength to strength today. It's up by 5%. Guzman and Gomez as well, up by 4%. No news that I can see with those guys. We've also had Fletcher Building looking pretty good, as well as Ingenia Group and Life 360, Reese, and Scentre Group as well. On the flip side, though, Nanosonics coming under some pressure. Bellevue Gold as well. Bellevue down by 4.4%. And Tabcorp New Hope Capricorn Metals, just reflecting what's going on in the macro. No news that I can see associated with those companies. And the small names that led the market, Novonix, there you go. Veeam as well in those gyros for boats and for ferries. It's up by 26%. EOS, we really had a good chat about a defense thematic in today's episode of The Call, if you'd like to have a listen. But yeah, EOS is up by close to 20%. Again, I can't see any news. IPD Group, there you go, down by 12.6%. Cusco, that's a company that IPO'd today. And gold coming under pressure with WIA Gold off by 7%. Tonight, we get a couple of reads on activity in the United States from Chicago Fed and Dallas Fed. We also hear from the Bank of England's Deputy Governor Claire Lombardielli, and MPC member of the BOE, Swati Dhingra, is also speaking. Tomorrow here we get earnings from Gentrack. We'll be speaking with the CEO actually. A few AGMs, including Brickworks, Pilbara, Regis, and Ramsey. And then a bit of data out of Japan. So inflation might put a bit of pressure on authorities there to tinker with interest rates. We will see. So that is the day on your screen right now, with the S&P ASX 200 finishing up by 0.3%, 8,417. We did climb as high as 8,462 today. And so we'll be watching, with much interest what happens for the remainder of the week. In the U.S., looking mildly positive as far as futures go, with NASDAQ and S&P 500 E-minis up by about 0.5%. Bit of pressure, though, coming through on the price of oil. You can catch up with any of the interviews we did throughout the day on Ausbiz. Just go to ausbiz.com.au. And we look forward to seeing you tomorrow. We're live from 9:45.